So we'll discuss problem sets related class sa audit of equity. Remember, we already discussed the procedures last time. So we mentioned during our discussion that in audit of equity, this won't take much of our audit resources because we expect few transactions related to audit of equity account. But that will still depend on the structure of our client because some clients like large publicly listed entities could still have many transactions related to their shareholders' equity. But for smaller closely held companies or private corporation, so it's possible that they have just few transactions affecting their equity account. So normally class, yung main document that we will be asking for from the client to validate share-related transactions would be the minutes of meetings of the board of directors. Because most of the transactions or almost all transactions affecting the shares of the entity, the equity of the entity, will be approved by the board of directors no, of the company. So yung board of directors ng company, so sila yung senior management, those in charge with governance of the entity. So let us proceed with problem number 1. So problem number 1 class, auditing various equity-related transactions. So here is a copy of the problem. So you may refer to your own handouts. So para mas clear no, yung mga transactions. So I'll just read the background of the problem. So with our representation as managing partner of the auditing firm, we were engaged to audit the financial statements of the client at the close of their first year of operations on December 31, 2020. So the company closed its books prior to the time you began your field work, or we began our field work. And our audit and review showed the following shareholders' equity accounts. So we have here the ledger of share capital and the ledger of retained earnings. So including the information about the transactions posted in these ledgers. Now, like for example, so from the minutes of the board of directors meetings, we gathered the following transactions. So as mentioned earlier, one of the main documents that we will be asking from the client when we audit the equity account of their financial statement would be the minutes of directors meeting. Okay, normally we will ask them from the management which will be provided by the entity's corporate secretary. Kasi normally yung corporate secretary, siya yung responsible mag-take ng minutes every time na merong meeting yung board of directors. And yung itsura niyan, class, nung minutes of board meeting ng directors, so it looks like a board resolution. So with attendees, details of the meeting, and the matters, no? Like decisions that the board came up with, so during that specific board of directors meeting. Okay? Now, notice on this additional information muna before we look at the individual transaction. So, look at the additional information. Take note that the authorized share capital of our client was 150,000 shares and the par value per share is 100 pesos per share. Now, on January 2 transaction, the company authorized the issuance of 50,000 shares at 120 pesos per share. So how much is that? 50,000 multiplied by 120 pesos per share. The total amount is how much? 6 million pesos, right? And if you will notice, on the share capital account, on January 2, there was a credit of 6 million pesos. Do you follow? And there is a note here that says CR. CR stands for cash receipts. So that is why the debit side of this transaction was a debit to cash. So to reconstruct your transaction, the entry of the client originally was debit cash 6 million and credit to share capital account 6 million pesos. Follow? So kaya lang class, the credit to the share capital should be limited only to par value. So we already found the first error of the client. So it was incorrect to credit the entire proceeds of 6 million to share capital. So that would be the first adjustment to the company's account. So the credit should have only be up to which amount? 50,000 multiplied by 100 par. So 50,000 times 100 par, that is how much? 5 million. Okay? And the excess over 5 million, which is 1 million, 6M minus 5M, should have been credited to share premium or additional paid-in capital or APIC. Okay? So yung share premium, that's what credited or that's the account that is being credited in excess of stated or par value of the shares. So in Philippine law, in local law natin, yung share premium is also called as additional paid-in capital. You might encounter the term in other references. So same lang yun, no? Yung share premium and APIC or additional paid-in capital. So take note lang natin yan. Now let's check the other information. August 30 naman, authorized the acquisition of 5,000 shares at 110 pesos per share. So 5,000 times 110, how much is that? 550,000. Kaya notice, on the share capital ledger, there is also a debit to 550,000 arising from that August 30 transaction. However, class, the reacquisition of the shares without retiring them are not considered cancellation of the shares. So the companies buying back of their shares without canceling them would only result to what? Treasury share transaction. So therefore, this transaction on August 30, the reacquisition of 5,000 shares at 110 pesos per share should not have been debited to share capital. So it should have been debited to which account class? Treasury shares. And treasury shares is accounted at which method in Philippine accounting practice? At cost. So therefore, the cost of the treasury shares, which is 5,000 times 110, 550,000, it should have been debited to treasury shares instead to share capital. So that would be our second adjustment. Okay, so we'll summarize the adjustments later. So CD, that means cash disbursement. So ang entry dito ni client was debit share capital, which is incorrect, and credit cash, 550,000 pesos. Next, December 1. December 1 authorized the issuance of 2,500 treasury shares at 115 pesos per share. So 2,500 multiplied by 115. How much is that? So 25 times 115 per share. How much? 287,500. So that is why you can see there is a credit to retained earnings of 287,500 here. So therefore, the entry of the client was debit cash and credit RE 287,500. But is it correct to credit retained earnings when there is reissuance of treasury shares? No. The credit should have been where? Treasury shares. To the extent of cost. So how much is the cost of the treasury shares? 110 per share. So therefore, the credit to treasury shares should have been 2,500 multiplied by 110 only, which is how much? 275,000 pesos. But the total receipt was 287,500. So there is a gain on issuance of treasury shares. So kasi yung cost was only to 75,000. But the proceeds were 287,500. Okay? Actually, there is a, tama ba? So, yes, there is a gain, no? Kasi yung na-receive to 87,500 but the cost was only to 75,000. So, may gain na how much? 287,500 minus 275,000, 12,500. So, that gain should be credited where? Share premium treasury. So, still not retained earnings. Okay? Kasi class, any gains on share-related transaction are reported in the share premium of our client, not in income statement or not in retained earnings. Okay? Pero yung loss, pag mga loss naman sa share-related transaction, halimbawa, loss on sale of treasury shares or reissuance of treasury shares, loss on retirement of shares, where should be the debit on those losses naman? Ang debit, normally, sa share premium of the related transaction. Kaya if the client or the company reissue the treasury shares at a loss, not at a gain, then the debit should have been to share premium if there is a balance on the share premium from similar or related transaction in the past. But what if there is no balance in the share premium from similar transaction? What would be debited in that case? Retained earnings. Okay, so therefore, for share-related transaction, if there is a gain, there is an excess of proceeds over the cost or carrying amount, the credit would be always share premium. But if there is a loss, the debit would be share premium also from similar transaction as a general rule, and the excess would be debited to retained earnings. So in conclusion, the retained earnings of our client may be debited for losses, but it will not be credited for gains. So kasi ang credit sa gains would always be share premium. Next, December 29. So declared a 10% dividend payable on January of the following year to shareholders on records as at January 15, 2021. The market value of the share on December 29, 2020 was 130 per share. So this is a share dividend. Now regardless whether share dividend yan or cash dividend, the account to be debited is retained earnings. And according to the problem, the client debited on December 29, 545,000 pesos. We'll just check later if this amount is correct. Follow? Then the last transaction that we haven't analyzed yet is itong credit na 4 million on December 31. So in this case, the notation is J. J stands for General Journal. And this 4 million is just the profit or loss during the period. In this case, profit. Kasi if you look at P&L summary, there's a 4 million remaining profit after closing the revenues and expenses. So the 4 million is correctly credited to retained earnings. So there will be no adjustment related to this one. So yung merong adjustment lang is itong first 4 transactions. Okay. So let's summarize the adjustment. Kasi requirement number 1 class, adjusting entries as of December 31, 2020. And requirement number 2, adjusted balances ng share capital, share premium, retained earnings, and shareholders' equity. Summarize na natin yung adjustment that we have identified earlier. So, yung first one, yung transaction muna ng January 2. This one. So, we have already analyzed the effect earlier. So, overstated yung 6 million pesos equal dun sa share premium. How much na nga yung share premium? 1 million. So, debit share capital, 1 million to reduce the 6 million amount. Because that excess of 1 million should have been credited to share premium. So, kasi yung credit dun sa original issuance, 50,000 shares should be limited only to par value of 100 pesos per share. So, in that case, adjustment for number 1, share capital, 1 million debit, and credit, share premium, 1 million pesos. Next, August 30 transaction. Remember, August 30 transaction, this was the acquisition of treasury shares. So, it should not be debited rather to share capital. It should have been debited to treasury shares instead. So, debit treasury shares, 550,000. So, same amount because this is the cost, 550,000. And credit share capital to cancel the debit on the share capital. Kasi incorrectly debited to, di ba? So, how do you cancel it? You credit the same account, share capital account, 550,000 pesos. Next adjustment, the December 1 transaction. So, on December 1 transaction, the retained earnings should not be credited for the reissuance of treasury shares. So, to cancel the credit on retained earnings, what should be the correct adjusting entry? Debit RE. So, debit retained earnings, 287,500. So, why do we debit the RE in this case? To cancel this credit on 287,500. Because the reissuance of treasury shares should be credited not in RE. So, saan dapat i-credit? Sa treasury shares account itself din also. So, credit treasury shares. Kaya lang, yung credit sa treasury share should be limited to cost. Ang cost 110 per share lang. So, 2,500, this is the number of shares reissued, multiplied by 110 pesos per share cost. So therefore, how much is the correct credit to treasury shares? 275,000 pesos only. And the excess of 287,500 over 275,000 that you were already able to compute earlier at 12,500. Where should it be credited? Share premium treasury. So here in our illustration, we can just use share premium. So credit share premium 12,500. And then finally, the last transaction, December 29, this is for the share dividend. So the client debited retained earnings 545,000 and credited share capital 545,000. Kaya lang class, premature yung pag-credit ng client sa share capital because the dividends are expected to be distributed the following year pa. Kaya dapat i-reclassify muna siya sa share dividends, distributable or payable, not yet on share capital. And we also have to check the correct amount. So let us check the correct amount. Dividends or shares that are entitled to dividends are those outstanding shares. And outstanding is equal to issued less any treasury. So let us calculate the outstanding shares on the date of dividend declaration. The issued share was 50,000 share based on January 2 transaction. 50,000 yung na-issue na shares. But there were treasury shares reacquired 5,000. Pero out of 5,000 treasury shares, na-reissue yung 2,500. So at the date of declaration, December 29, ilan yung remaining treasury shares? 5,000 less 2,500, we get 2,500 also. So therefore, how much is the outstanding shares? So 50,000 less 2,500, outstanding shares were 47,500. And the share dividend declared was 10%. By the way, class, yung share dividend, considered siya as recapitalization of retained earnings. So portion of RE will be transferred to share capital or share capital and share premium. There are two types kasi class of share dividend. We have large share dividend declaration or small share dividend declaration. So yung difference class lies in the measurement. Pag large dividend declaration or declaration of at least 20% or above, it will be capitalized at par or stated value. So meaning, ang ika-charge sa retained earnings would be equal to the par value or stated value of shares. Pag small share dividend naman, which is when the declared percentage is below 20%, the amount to be recapitalized from the RE is equal to the market value of the shares. In this case, ilang percent yung dineclare? 10%. So, is it small or large share dividend? Small lang. Kasi less than 20%. So, ilan yung number of shares expected to be distributed class? 47,500 multiplied by 10%. This is 4,750. Multiplied by, what do we use? Par value or market value? Market value. So, kasi small share dividend siya. So, the market value is 130 pesos per share given doon sa mga transactions earlier. So, 4,750 times 130, we get 617,500. So, si client, correct na dinebit niya yung RE, pero the amount is insufficient kasi the client debited how much? 545,000. When the amount that should have been debited is how much? 617,500. So, magkano yung difference? So, magkano yung remaining amount that should be debited pa? 6,175 less 545,000, how much? 72,500. So, since kulang lang yung debit sa RE, yun na lang plus yung magiging adjustment. Debit, RE, 72,500. Hindi na 617,500. So, kasi meron ng initial entry si client na debit na 545,000 pesos. So, therefore, debit, retained earnings, 72,500. Then, the client should also cancel the credit to share capital kasi hindi pa naman distributed yung share. So, debit share capital, 545,000 pesos. To cancel the credit to share capital. Besides, incorrect din yung amount. Kasi the amount should be equal lang to what? Par value. So therefore, the correct credit is share dividends distributable pa, hindi pa share capital. And at the date of declaration of the share dividend itself should be measured at par value or stated value. While yung debit or charge sa retained earnings should be equal to market value or fair value, pero yung share dividend distributable, limited lang sa par value. So, ang par value nun is 4,750 multiplied by 100 pesos per share. The par value. So, how much is that? 475,000 pesos. So, credit, share dividend distributable class, 475,000 pesos. And then the excess, magkano yung excess niyan? 617,500 less 475,000. Magkano yung difference? So, 617,500, the total charge to RE, less 475,000. How much? 142,500. Tama ba? So, that would be going to share premium. So, therefore, class, yung share premium and share dividend declaration will be recorded at the time of declaration. Pero yung share capital, it will be recorded to share capital at the time of distribution. Okay? Kaya at the date of distribution, ika-cancel lang tong share dividend distributable, debit, share dividend distributable, and credit share capital for 75,000. But that would occur the following year pa, on January 2021. Okay? So, here on December 29, at the date of declaration, yung credit muna is share dividend distributable and the excess will be reported in share premium already. So, at the time of declaration. So, that's it for the last adjustment. So, let us compute now for the requirements. So, yung other requirements, requirement number 2, adjusted balances, no, nung mga items na nandun sa requirement kanina. So, first, share capital. So, share capital is equal to issued shares. Issued share ay 50,000 shares multiplied by 100 pesos per share. Answer number 2, letter A, 5 million pesos. So, you do not deduct the treasury shares from the issued shares. Dinideduct lang natin class yung treasury shares from the issued shares to determine the outstanding shares. Kasi yung treasury shares, they are not considered retired or canceled. Now, since required din later, yung total amount ng shareholders' equity, i-prepare na rin natin yung information. So, ilalagay ko na dito yung share dividend distributable. Kasi ang treatment sa share dividend distributable is adjunct account siya ng share capital. Pag sinabing adjunct account, when you present it in the financial statements, now when the client presents it in the financial statement, it will be presented as addition to share capital account. So, at share dividend distributable, although it is not required individually. Next requirement is share premium. So, to compute the share premium, we add the share premium from our adjustments earlier. Yung 1 million, this is the adjustment from January 2 transaction. So, you can track the adjusting entry on January 2. Then, the 12,500 share premium, so came from reissuance of treasury shares last December 1. And yung 142,500 naman from the declaration of share dividend. So yun lang yung 3 transactions affecting the share premium. So magkano yung adjusted share premium? So 1 million plus 12,500 plus 142,500 equals 1,155,000. So, number 2 requirement, letter B, we have 1,155,000 pesos. Next, letter C, retained earnings naman. So, refer to our adjustments also. So, we have 4 million without adjustment. So, as is na to. Then, ito na-cancel to, di ba? So, wala tong 287,500. And ito na-adjust. Plus 72,500 earlier, right? So, to make it 617,500. So therefore, the only correct entry sa RE is yung credit na 4 million less yung 617,500. So adjusted balance ng retained earnings is 3,382,500. So requirement 2, letter C, 3,382,500 pesos. Then requirement D class, total shareholders equity. So ito na rin yung component ng total shareholders equity. Share capital, share dividend distributable, share premium, and RE. Kaya lang, kasama rin sa total shareholders equity yung remaining na treasury shares. So ano ang presentation ng treasury shares sa shareholders equity? Contra equity account. So pag sinabing contra equity account, what does that mean? Deduction siya from shareholders equity. So, ilan pa yung remaining balance ng treasury shares? 2,500 pa. Kasi total yan, 5,000. Na-reissue yung 2,500. So, there were remaining 2,500 multiplied by the cost, kasi treasury shares are accounted for at cost, 110 pesos per share, you get 275,000. So, since contra equity account siya, it will be deducted from the other shareholder equity components. So, magkano ngayon yung total equity na requirement sa number 2 letter D? How much? 9,737,500. So, requirement D, answer, 9,737,500. So, take note of this. Requirement number 3, in an examination of shareholders' equity, an auditor is most concerned that yung letter A, correct ito. Capital stock transactions are properly authorized. So this is one of our objectives when we audit equity account. Now let's just check why the other choices are incorrect. Yung sa letter B, stock splits are capitalized at par or stated value. So incorrect. So actually, yung stock split, it will not affect the total shareholders equity account. Kasi what happens stock split is that the number of shares are multiplied by the factor of the stock split. Halimbawa, 2:1 times 2, but the par value per share will be divided by 2 also. So therefore, the total share capital will remain the same. So yung magbabago lang class is yung number of shares and the par value or stated value per share. So it's not being capitalized. Yung letter C naman, dividends during the year under audit were approved by the shareholder. Why is this incorrect? Kasi it's not the shareholders who approve dividends. Who approve the dividends? The board of directors. Next, letter D. Changes in the accounts are verified by a bank serving as a registrar and stock transfer agent. So it's not the registrar, nor the stock transfer agent, nor the bank that verifies the changes in the account of shareholders' equity. So because each transaction affecting shareholders' equity should be validated and approved by the board of directors of the entity. Okay? So kaya number 3, the best answer is letter A. Next, number 4. In an audit of medium-sized manufacturing concern, which one of the following areas can be expected to require the least amount of audit time? So, best answer is letter A. Kasi as we mentioned earlier, at the start of discussion, we expect the client shareholders equity to have few transactions only. No? So, we expect few transactions. So, therefore, it will require the least amount of audit time. Now, just to recap, yung audit procedures with respect sa share-related transactions si client, again, it depends on the structure of the client. So, pag si client is small, private, closely held corporation, normally the records of their shares or stocks will be held by the client lang itself. So, in that case, the appropriate audit procedure would be inspection of records. In case the client naman is large publicly listed entities, wherein the records are being managed by an independent stock transfer agent, then our appropriate audit procedure would be confirmation. So since the records are being handled by a third party. So kaya to apply, number 5, question, when a corporate client maintains, highlight, its own stock records, the auditor will primarily rely upon answer inspection. Kaya answer is letter D. So inspection of the stock book at year end and accounting for all certificate numbers. Next, number 6 class. If the auditee has material amount of treasury shares on hand at year end, the auditor should, best answer is letter A, count the certificates at the same time as the other securities are counted. I will explain. Some clients have this tendency to report treasury shares as asset because treasury shares are similar to investment in shares. Yung investment in shares, paano pinapresent yung investment in shares? As asset, di ba? It is reported as part of investment of the client. Now, yung shares ni client or yung shares ni company, that is similar to investment in securities of other company. But the accounting treatment is different. Yung investment ni entity sa shares of other companies, considered yun as asset, investment in stocks. Pero yung shares held by the entity, own shares nila, not shares of other entity, those are not asset, those are not investment. Ano yun, class? Treasury shares, which is presented as contra equity account. So sometimes, ang ginagawa ni client, they thought they are investing on themselves. Kaya pag may treasury share sila, pinapresent nila as if investment account or investment item or asset, which is incorrect. Okay? Kaya pag si client, meron siyang investment in shares, we have to inspect the investment in shares. Baka kinomingle doon yung shares of their own entity or own shares nila. So yung own shares nila, it should be presented as treasury shares instead. Okay? So ito incorrect, yung letter B. So count the certificates only if the company had treasury share transactions during the year. Even if walang treasury share transactions si client, it's possible kasi na yung treasury shares coming from the previous year. So we still need to inspect yung material treasury shares nila as of year end. So incorrect din itong letter C. And incorrect din yung letter D because again, treasury shares will not be classified as asset.